Hi, I'm Tony Richard Preston, Principal Advisor and Managing Director at Callara Wealth. Today I'll be looking at a worked example of CSS 5411 versus age retirement. General advice warning. The advice in this video is general advice only and does not take into account your individual circumstances, needs or objectives. The CSS as a defined benefit scheme is complex and has different rules to standard accumulation funds. It is recommended members seek their own financial advice from a licensed financial advisor. Okay, let's meet Geoff. Geoff is approaching age 55. He has 30 years contributory service with CSS. He's currently on a salary of $90,000 per annum, or his final salary. His CSS member component is $250,000. His CSS productivity component is $110,000, and he's married to Mary, who is also age 54. Geoff is considering whether a 5411 would work best for him. First of all, let's look at the age retirement calculation for the index pension. This is final salary multiplied by an age factor. For Geoff, $90,000 multiplied by 38.063% provides him with a lifetime index pension of $34,257. The age retirement maximum non-index pension is calculated as follows. Member plus productivity components multiplied by age factor. So $250,000 plus $110,000 multiplied by 9.25% provides him with a lifetime non-index pension of $33,300. As $33,300 is greater than 18.5% of Geoff's final salary, it will be capped at $16,650. The balance of his member and productivity components, or $180,000 in this case, will be paid in the form of a lump sum that will need to be rolled over to another superannuation fund and preserved. So Geoff's benefit will consist of a lifetime index pension of $34,257, a non-index pension of $16,650, and a lump sum of $180,000. Now let's look at the 5411 benefit calculation. For the lifetime index pension, this is Geoff's member component multiplied by 2.5 multiplied by an age factor. So $250,000 multiplied by 2.5 multiplied by 9.25% provides him with a lifetime index pension of $57,813 per annum. The 5411 non-index pension would be calculated as follows. His member plus productivity components multiplied by an age factor. So here, $360,000 multiplied by 9.25%, which provides him with a lifetime non-index pension of $33,300. When comparing a 5411 and age retirement benefit, a useful analysis to undertake is the net present value of the future cash flows each option provides. Net present value simply discounts the value of future cash flows by a set interest rate. In this case, we'll assume the inflation rate of 2.5%, discounting future cash flows, which is for Geoff, his lifetime index pension, his non-index pension through to his life expectancy, and then with a 2/3 or 67% reversion to his wife Mary. Here we can see the overall difference in benefits is a total of $885,000. So if Geoff were to get his calculations wrong and choose age retirement over 5411, he may potentially be worse off by just under $900,000 over his lifetime. Now let's look at a scenario analysis where Geoff's circumstances are slightly different. First of all, his salary is $150,000 rather than $90,000 per annum. He's actually quite keen and considering to work to age 60. And he requires an income in retirement of $70,000 per annum after tax. So, applying the same net present value analysis, here we can see the difference between a 5411 and an age retirement is $297,000. So, Geoff would be $297,000 better off for working an additional 5 years. Tax and other considerations. Under this scenario, Geoff may be better off by just under $300,000 by working an extra 5 years. However, we have yet to apply Geoff's tax position, look at his long-term living expenses of $70,000 per annum, and look at additional strategies that he may employ over those 5 years. Assuming Geoff salary sacrifices into non-CSS super and any further surplus income is invested into Mary's name in superannuation, let's look at the following outcomes. Here we can see the net difference in wealth between a 54-11 and age 60 retirement for Geoff and Mary is just under $1 million by the time they reach age 80. Probably more important for Geoff and Mary though is the difference in retirement income they'll achieve by Geoff working through to age 60. In this example, we can see that Geoff is on average about $20,000 a year better off from an income perspective by working through to age 60 compared to 54-11. So why choose Callara Wealth to provide you advice on your CSS and retirement planning? First of all, we are genuine fee for service. That means no asset-based fees, no life insurance commissions, and we will provide you with a fixed price quote upfront based on the complexity of the advice you require. Secondly, I have over 22 years experience providing advice to CSS members, both 54-11, age retirement and redundancy benefits, as well as their ancillary superannuation accounts and non-superannuation investment and tax requirements. Thirdly, Callara Wealth is privately owned and operated. We're not owned or affiliated with a superannuation fund, bank, or life insurance company. If you would like to discuss your requirements further, please feel free to book a complimentary 15-minute phone conversation with myself. If you would like further information, please visit our website, www.callarawealth.com.au. Send us an email at advice@callarawealth.com.au or give us a call. Thank you.